speaking. I want to introduce our first speaker this evening, who is Adam Harris. Now, Adam is going to kick things off with what I think is a very topical presentation this evening. As I said a moment ago, the S&P 500 trading around 6% higher year to date. We have had a modest pullback of late. But I think what Adam is going to discuss this evening is the bull market that we've seen so far in equities, not just this year, but also at the back end of last year, and what to watch next. So without further ado, Adam, let me hand the stage over to you and take it away.
So I think I have sort of 20 minutes to go, and normally I'm not nervous speaking, but I actually am this evening. I think there's so much going on in the markets today. So one of the first things that I want to say to you is that if you really want to get a handle on understanding how economies work, I would really recommend that you read Ray Dalio's books on on the New World Order or just kind of managing debt crises. So Ray Dalio, who's obviously the founder of Bridgewater Associates. So if you really want to kind of understand how economics work, that is the best book that I can recommend to everyone tonight. Is anyone kind of familiar with that? Anyone? Okay, good. So there we go. I am, just to go through this, I am just a trader. Nothing fancy. I manage client money and I trade for myself. And so I'm a technical trader predominantly. I think this is the key thing. I'm a technical trader. My previous life, in my early life, was kind of in the visual effects industry. I was kind of one of the early adopters. I ran a company in South Africa and Switzerland, which was the movie business. And then I wanted to kind of exit that and get into managing stocks, but it actually introduced into trading currencies. And so this is kind of just an example of one of the kind of clients. This is sort of one account that I quite like to show off. I love this because one of the things that's great about it is if you look, for example, at November and December last year, we have sort of -5 and -1. And then we have this amazing month in January. And actually, the point of showing you this is that part of the reason is that your losing trades hit their stop losses first. Your winning trades take longer to get to their profits, which is why my winning trades from November and December only closed out in January. And so January is disproportionately big because of just the way in which it kind of happened. And this is where we are at the moment. So I use a combination of algos and discretionary trading. I'm predominantly a trend trader. And as I said, I am a technical trader. So one of the things I want to talk about, and I think this is very, very important. Please forgive me. I've just come back from Jamaica. It's not a brag. The wife was with sort of Corpay, and it was a corporate thing. So my body clock is a little bit out of sync. Is that I want to talk, and I think this is very important, is to understand the differences between being an investor and being a trader. So first of all, if you're an investor, you are thinking long-term. You're probably focused on spare cash. So usually what happens is historically you're looking at putting your money into stocks or property or wine or something that you know has a very high probability of kind of increasing in value over time. This is really important because you need to understand why you are selecting the markets that you are choosing and kind of why you're engaging in those. And so when you're an investor, it's usually cash that you don't need immediately. So you can afford to put it aside, and your logic is usually that, well, the sooner I put it into the market, the sooner it could just sort of increase in value. And so when we look, for example, at the S&P 500 as an example, as an index, the S&P 500 is just an outstanding performer, right? So you don't have to invest it in the UK. I know we live in the UK, but you can put it wherever the performance is. All right, that's a very kind of important distinguishing kind of characteristic. You need to understand that you're following where the money-making opportunities are. And loyalty is not really a thing. Okay, so that's a kind of a psychological, emotional thing. Loyalty does not reward you when it comes to investing. You focus where the money and where the growth is. Does that make sense? Okay, so whereas when you're trading, you're looking to earn an income every single month. So it's kind of the difference between somebody who buys property and then owns it for 10 years and then kind of sells it versus someone who's buying a property to flip it to then make a profit. So it's a very different strategy. It's a different mindset. You're looking for different things. And so as a trader, you are looking for shorter term, higher probability moves so that you get paid at the end of the month. So you have to close out your positions on a monthly basis. So you're looking for positions that last a few hours to a few days to a few weeks maximum. So it's a different mindset. So, okay, so here I've kind of, the slide up here is, how many of you think we're in a bull market? Just give me a bit of a hands up. How many people think we're in a bull market? Okay, we are. We are in a bull market. I know that it doesn't feel that way. We live in, this is very unusual. In my entire life, I've never seen so much disinformation and so much misinformation in social media. It's insane. And almost all of it can be traced back to Russia. Sorry if anyone here is from Russia, but that is almost like you can just source it back to it. We are in a bull market. So whether you believe it or not, we are. Okay, so what are the conditions? What do we need to see? We need to see price above on the weekly chart. If price is above the 50 EMA, we are generally in a bull market. Okay. Are we seeing higher lows and higher highs in price? If we are, we're also in a bull market. So in other words, it's not just one thing. We're looking at 2 or 3 different things. Is the MACD above 0? This is a bonus thing. So if the MACD is above 0, it's bullish. If it's below 0, it's bearish. So if it's above 0, it's bullish. That's great. If we see the daily price above the 50 EMA, that's a bonus. If we see the daily MACD, that's a bonus. But the weekly is really where your magic is. So now I'm talking about it more as a investor. So now we're talking about longer term positions. 6 months, 2 years, 5 years. Sort of that kind of timeline. Okay. So the short answer is yes, we're in a bull market. We are absolutely in a bull market. Also, so it's very important that one of the things that I would implore you to do is to look at the weekly charts for perspective. So if we have a bit of a bear market at the moment, what's going to happen with the media? Is the media going to be positive or negative? Negative, right? It's going to be very like, oh, no, the sky's falling. But when you look at the weekly, you can see it's a retracement. It's nothing unusual. The weekly and the monthly have to have retracements. It's normal. So when we see that, we know that's the case. Now, the reason I'm showing you this chart here is I want to show you, I've got here a standard, a 50, a 20, and a 10. Nothing complicated, guys, ladies and gentlemen. It's not that complicated. 50, 20, and 10. The 50 is just a beautiful indicator. If we're above the 50, we're bullish. If we're below the 50, we're bearish. That's it. Okay, it's a starting point. And you can see here also, if you treat the 20 and 10, so I'm going to give you some sort of golden goose, kind of golden egg kind of information here. If you treat the 20 and 10 as a train station, so price goes away from the train, it leaves the train station, it comes back to the train station. So if you leave the 10 and 20 as a train station, you can see all these points here organically where price has returned to the train station. And those are, generally speaking, very good entry points for price. Okay, so there's risk. Let's talk about risk management. If you're an investor, your risk is different than if you're a trader. So if you're an investor and you're investing in the S&P 500, there really isn't kind of any danger in the same sense that there is with when you're trading, because the S&P is made up of the Olympic athletes of the best companies ultimately that exist in the US. That's like the Starbucks and the McDonald's and the Nike. It's everyone. It's Apple. It's Google. So it's made up of the best performers. So the idea is that in theory, it should continue to go up. It should always continue to go up. And it's 500 companies. So it's not 30 like the Dow. It's not 100 like the tech stocks, NASDAQ. It's 500. So in other words, it's diverse and it's very strong and healthy. So your S&P 500 is your ultimate indicator of the health of the global market. Does that make sense, guys and girls? Sorry, I'm not just like... So it's one of the things you want to have a look at. So these pullbacks into the 10 and 20 on the weekly become really good entry opportunities for investors. Also for traders, but mainly for investors. Because the worst thing if you're an investor is that you're kind of getting in too late. That's very frustrating. And the reason for that is very simple. You're waiting for the market to give you evidence that it's moving. So you wait and then you see it move and then you jump in. And that's always at the kind of wrong, that's kind of out of sync with where the market's going. And when it's pulled back, that's when it doesn't really look like it's going anywhere. But if you're a seasoned, experienced, educated kind of technical trader, that's where the best setups are. So I wanted to kind of show you this. I wanted you to see that if you use on the weekly chart, the 50, 20, and 10, simple moving averages, nothing complicated, that you can get a sense at least of where the market is supposed to be. So now, since I kind of copied and pasted these charts in here, how am I doing for time, by the way? How are we doing? 10 minutes? So since I kind of pasted these charts in here, the market's been correcting. It's not a bad thing. It has to correct. It can't keep going up forever. There's got to be profit taking and has to have a correction. So the corrections are your perfect time for you guys and girls to get in. Perfect. But what are we looking for? So on the weekly or the monthly, we're looking for a green candle. So we're looking for price to pull back into the moving averages, and we're looking for a green candle that usually tells us, the way I want you to think about it is it tells us the buyers are coming back into the market. So now if you listen to the media, which is terribly toxic, it doesn't matter if it comes from JP Morgan. I don't want you guys to listen to it. I want you guys to pay attention to the chart. I want you to have a little bit of faith in the underlying market. The US economy is the strongest it has been in 50, 60 years. Why? Because you have a strong middle class. This whole trickle-down thing, it's bullshit. So excuse my language, but it's crap. It doesn't work. Strong middle class is the best way to go. All right, one of the best ways to do it, and so the US is the biggest economy in the world. How many of you are you aware that the US dollar makes up like 70% of the currency? I mean, the number's not even accurate, but it's about 70% of all transactions on the planet are the US dollar. Okay, the US economy, the BRICS thing is not a real thing. So it might be a little bit of a sensitive topic here, but if you are the reserve currency for the planet, you have to take on all of the debt. That's your job. You have to take on all the debt. Do you think China is going to take on all the debt of non-China countries? Not at all. No one is going to do it. Russia's not going to do it. So my point is this. The US economy, and again, if you read Ray Dalio stuff, this will make sense to you. The US economy and the US Reserve and the US dollar are likely, for most of everyone in this room, I'm just doing a quick age check, is going to be, in our lifetime, is probably going to still be the reserve currency. Okay, so don't let the BRIC stuff and don't let the YouTube rabbit hole stuff get in your head. Almost certainly, it's the US dollar. Okay, it's the strongest economy in the world now. We can see that as well. Everyone was worried about China. China is now 60% at least of the US economy. It's not a problem. It's not a threat. Okay, so we're good. We are solid on that. So I just want you to kind of do that. Let's talk a little bit about risk management tips. So one of the things that you should do is, obviously you're using cash in theory and money and savings that you can afford to lose. So the logic here is, it's not that you're going to lose it. If you put the money into the S&P 500 or into an index, the risk, so let's talk about this. It's kind of, if there's a spectrum, if you put your money into cryptos, which is new, which is a very high risk, and I'm not going to say high reward, it's just high risk because it's new, you've got that. But if you go through to the stuff, like the stocks have been around for 300 years. So like stock exchanges have been around for 300 years. So if we look at, say, the Dow, which is 100 years old, you look at those are blue chip. So if you put your money into those, statistically, the odds of you losing your money on those is close to nil if you just stick with it, historically speaking. But as you kind of go to the newer stuff, the risk is higher. Okay? So one of the things I want you to think about is that, think about this. Your pension funds are putting money into the S&P. They're buying the blue chip stocks. They're buying all that stuff. So they think it's safe enough for you to do it. So one of the things I want you to just think about that is that they tend to make sense. Don't panic. The monthly and the weekly charts, one of the best charts to give you context. So when you hear about the media going, oh, the market's down so much, such and such today, look at the weekly. Look at the 10 and 20 moving averages. It comes back to the train station, and then it tends to turn around. Does that make sense, guys and girls? Got to say this. So think about that as well, please. Also, have a look at Warren Buffett, Ray Dalio, Charlie Munger, unfortunately, he's passed away, Peter Lynch, One Up on Wall Street. These are incredible audiobooks you guys and girls should all be listening to. Their philosophy is always hold or buy but never sell. And they're talking there about the index, not so much about individual stocks. So you want to have a clear plan. Are you an investor or are you a trader? So can I get a sense, just curious, how many of you, and you could be both, but how many of you are investors? So how many of you are thinking about buying and holding? Okay. How many of you are looking at a monthly income from trading? Just, okay, there we go. Boom. Okay, cool. And by the way, I do both. So I do both. So the account that I showed you earlier was just a trading account. Self-awareness is key. So all I mean when I say that is you need to know when you get into the market, are you trading or investing? Are you like, for example, who is a Tesla bull? Who's a Tesla bull? That's great. Who's a Tesla bear? Oh, that's great. Okay, cool. I'm a Tesla bear. But it was like quite interesting to see that. So self-awareness is key. You want to know why you're getting in. Are you getting in because you think that fundamentally this is a thing that like this is amazing, it's going to be world changing? Don't let outside media influence you. And by that, all I mean by that is social media, the JP Morgans. I constantly see JP Morgan saying, we think the S&P is going to go to this number. We think gold's going to do this. And I feel like you guys and girls should focus on what do you think the chart is going to do. Like that's all I'm saying here. I want you to transfer the responsibility of analyzing what you think price is going to do to yourselves. And that's a bit of a journey for you. Remember, index and healthy stocks tend to go up more than anything else. They don't go sideways. They go sideways a bit, but they're never really, and we have a bear market. When we look at the markets now, they had COVID, which was a massive correction, and then we had a bear market last year. And that's it. We've had all our big corrections. So in theory, bear with me, barring some unforeseen incidents, we have the next 5 to 15 years of bull market ahead of us. Okay, so the only reason I'm finishing on this is that I have a YouTube. I do a weekly analysis. It's not a big thing. If you want a weekly analysis across the different asset classes, it's there. It's free for you. So you guys can go ahead and have a look at that. And I'll go back to this because actually I think kind of this is really the key thing. I think we're doing okay for time. We're okay. And so really my main goal here, what I want you guys to think about tonight is, are you investing? Are you trading? And if you're trading, what is your strategy? Or which markets are you looking at? Are you a trend trader? Are you a counter trend trader? Those are the crucial things. Charlie and I, and you've got some incredible speakers tonight. Seriously, Charlie, we've got Ali up as well. Most of them, I want you to please take note of the things that the same things that they all say. Those are the kind of the key things. If all traders agree on certain things, those are the things you need to be paying attention to. And one of the things we all spoke about tonight is kind of what keeps you up at night. So if your positions are offsides, should you cut them down? Kind of talking about keeping, kind of focusing on the trend as well. We've got Charlie's going to talk to you guys about higher time frame trading versus day trading. There's different things as well. You're not under pressure. Don't feel that you have to day trade because other people talk about it. Don't feel that you have to trade cryptos because other people are trading it. This is a really key thing, guys and girls. So, ladies and gentlemen, I'm going to leave you with that. I just want you to think about different things. Okay. Any questions? Oh, Ray Dalio? Yeah. So Ray Dalio, the main one is called, so he's got an amazing YouTube video called somebody help me out here? Thank you. And his book, which is the most incredible one, which is called The New World Order, which kind of was written when he thought China was kind of potentially going to kind of take the lead. But it is incredible because he's one of the most sophisticated investors that I know. Honestly, I think it should be required reading for everyone on the planet. Like if you read those books, you will know more than most people. And he advises, he advises the White House. That's how good his stuff is. He advises the White House on what to do to salvage, like if there's a bear market or something. Very, very good, guys. Okay. Peter Lynch talks about how if you have 1,000 stocks in your portfolio, for him, that works well because you're going to be a winner anyway. Buffett talks about good management. So don't employ any crazy people who are posting on Twitter all the time. That wouldn't be his thing. That kind of thing. So common sense, guys, but also the world seems really crazy right now, and I appreciate that. But from an investment and trading perspective, there are lots of opportunities, and it hasn't actually changed much from it has. All right, so is that enough? We good? Sorry, guys. Thank you.